Did inflation actually already peak? That is something which we would all like to know, because this is super important for the future of the stock market and the crypto market, because this has a huge influence on price development in those markets. So we would like to know if the freaking inflation has already peaked or not. So let us try to find out first why inflation is so important for the stock market and if it has already peaked. Now I have prepared an interesting chart here for you. Here you see the long-term S&P 500 in the monthly chart. Okay, monthly. So one candle is 1 month. Like this goes back to the 1800s here, like to the 1800s. And inflation in orange. Okay, inflation in orange. And the S&P 500 here in the candlesticks in logarithmic mode. So we zoom in and we try to understand what happened when there was very high inflation. Was this good or bad for the stock market? Now, I don't know how reliable the data is from the early 1900s. I'm not sure if we can take that data into account, friends, because we see that the candlesticks here are not really well defined. So I'm not sure if we can really take this into account. But the data starts to get really much more reliable, I would say, in the 60s and 70s, okay? And we can see, friends, we can see the following, that high inflation was normally not so good for the stock market. If I go here, actually, we see a very inverse relationship, okay? We see that here in 1970, inflation was high and the stock market had a low. Here in 1974-75, inflation high, stock market has a low. Here, inflation very high in 1980, stock market has a low. And every time when inflation starts going down, what happens? We get a rally. Inflation comes down, we get a rally. Inflation comes down and we get a rally. Okay? This is quite fascinating. So it seems that if inflation would come down, so if peak inflation would be behind us, that this would be extremely nice for the stock market and that the stock market might finally rally, that the stock market might finally show some good performance again. And there was this sudden supply shock with oil and other commodities that is not so dissimilar from what is happening today. So I think these two peaks here are kind of interesting for us and for our situation, because I strongly suspect, friends, I strongly suspect that as soon as this sucker here starts going down here, you know, the orange curve, the inflation curve starts going down, I strongly suspect that kind of similar as what happened here and kind of similar to as what happened here, we might get a strong bounce when this starts happening and bam, make an unexpected move to the upside. Now, if this will be a new all-time high, friends, I don't know, okay? Nobody knows. At least there should be some kind of bounce, because we see that here it also didn't go immediately into a new all-time high in 1974, 1975, when inflation started coming down. It didn't go immediately into a new all-time high from this low here, right? It went almost to all-time high levels, but then it corrected again, and it needed quite a bit more time, a few more years, to surpass these all-time high levels. So this means as soon as inflation comes down, in our case, right? As soon as inflation comes down, it means that we will get some rebound, but it's not said automatically that we are going to make new all-time highs. We could linger around here and it could take a few more years until we make new all-time highs. So therefore, it would be kind of interesting to know if inflation has already peaked, wouldn't it? And yesterday, the CPI data was released, and oh shock, inflation is extremely high, 9.1% year over year, okay? Really high inflation. So yeah, here's the inflation rate. We can read 9.1% year over year. The data has been released yesterday. But what we can also see, friends, is that the core CPI, so this is the consumer price index, minus food and energy, so minus the things that are quite volatile, is actually coming down. It has already peaked in March this year at 6.5% and is now coming down month over month and is now at 5.9%. Another thing that is an interesting metric to measure inflation that is not talked so much about, but is really important, is the personal consumption expenditure, okay? The personal consumption expenditure. And we can see that the PCE has also spiked at 6.6% in March and is now at 6.3%. And the PCE excluding food and energy, again, the volatile things, is already significantly down from its high in February at 5.3%. So we see kind of a trend here that if you exclude food and energy, the prices are actually coming down, and actually inflation seems to have already spiked in around February, March, okay? Now, if we go to another interesting chart that is super important to measure inflation, that is of course oil. Why is inflation so high? Why is specifically the CPI so high? Because of high gasoline prices, right? And now look what is happening with oil, friends. I was talking the last times already about this really strong bearish divergence in the weekly chart of crude oil, and what is happening. Indeed, we are starting to dump dramatically. Look at how the prices are coming down. Like, this is a really quite insane dump here, and it could go quite low because we have kind of a megaphone structure here. So the support is quite low at around $68 from a peak of 125. So oil prices could be cut in half in the next months. Other commodities are also coming down. I have talked about this a few times, but copper, like, look at copper. This is imploding, okay? Copper has spiked at 884 and it's now at 614 and falling, dropping like a stone, okay? Silver, same picture. Look at the implosion of silver from a peak of almost 30, now at 18, an almost already 50% retrace, almost. Gold, same picture, friends. Look at gold. It spiked at 2070, bam, falling down like crazy. So we see that many commodities are actually dropping. We saw that the core CPI is dropping month over month. We saw that the PCE, excluding food and energy, seems to have spiked in February and is now significantly down from what it was in February, and is coming down month over month, okay? So there is a kind of a trend that inflation has already spiked, yet the Fed, the crazy psychos, are continuing to raise the interest rates like complete crazy maniacs. That of course makes our friend the dollar index pump. That is clear. Why? Well, because it will get more difficult to take up new loans in dollar, and the other fiat currencies are even much worse. And the euro, for example, is dropping even below parity. It's now at 0.998. It has happened. It's dropped below freaking parity. And let's not even talk about the other fiat currencies, okay? People are flocking from other fiat currencies into the dollar. That's why it's rising so much. So the Fed is continuing to raise the Fed funds rate, okay? The interest rate. And we see that there was a declining trend since the 80s of the peak of the interest rate. And we could reach a peak of 2.5, 2.4 Fed funds rate quite fast. You see how fast this is going up. This is unprecedented. Such an aggressive rise has not been seen ever in the history of the Fed funds rate. This is really aggressive. So the Fed continues raising, but inflation might have already spiked. So what do you think will happen? What do you think will happen once the Fed is a bit slow? They are not on the fast side, one might say. Once the Fed realizes that inflation has actually already peaked, and then the CPI will suddenly start coming down very fast now that oil is dropping and many commodities are dropping, and we saw the trend already in the other metrics, the Fed will freaking pivot. They will say, guys, we are not raising the interest rate anymore as aggressively as we said. And the markets have not anticipated this. Look, the markets are going completely crazy now. They are anticipating a 100 basis point hike now on the 27th of July. They are thinking a probability of 78.6% for a 1% raise of the interest rate. 100 basis point hike, and only 21.4% for a 75 basis point hike, which already in itself is a crazy freaking high basis point hike. So that is absolutely crazy. The market is pricing in a super high probability for insanely high rate hikes. And now imagine what would happen if the Fed would pivot. Now, I'm not saying that this will happen in late July. It could happen also in September, or it could even happen as late as November. But what I am saying is that at some point when the Fed will see, inflation seems to be coming down faster than we thought, then they will pivot and then they will say, no guys, we are not raising the rates anymore. We will pause raising the rates, and in fact, we are even considering at some point to reduce the rates again, to freaking start reducing them, okay? Now, what do you think will happen in a crazy market that thinks that the Fed is going to raise by 100 basis points in July and by another 75 basis points in September? What do you think will happen with such a market? I can tell you what will happen, friends. I can tell you what will happen. Let me load the S&P 500, friends. Look at this here. And now I don't know when this will happen, and we could go down lower until this happens. But as soon as this is announced, bam, this will happen, friends. This will happen. Now, I don't know if we'll make new all-time highs or not. We could just pump a bit and could go down again, and then maybe in the next run go to new all-time highs. But I'm just saying that as soon as here, when the Fed announces that they will pivot, they will not raise as aggressively anymore or even reverse, okay? That will be the point, friends, when everything will go completely crazy. And this will be very much in line with what I said before about inflation. This will then be the point also when inflation will have started coming down again, okay? So this is my current picture. We might go down a bit more from here. It's really, really hard to say exactly when this pivot will happen. But as soon as this pivot happens, and I strongly suspect that it will still happen at some point later this year, as soon as this will happen, we will get huge pumps, friends, huge pumps. We will get nice pumps in the stock market, and consequently, of course, also for our crypto friends here, as soon as this will happen, nice pumps in the crypto market. Here also, we don't know if it will go directly to new all-time highs, maybe not, maybe we will just bounce and then later go to new all-time highs, but some form of insane bounce will happen as soon as the Fed will say that they are going to pivot. So you see how important inflation is, and we would like inflation to come down. But as you saw, there are already very strong indicators that inflation has started falling, but the Fed is again being slow. And as soon as they will realize it, they will pivot, and bam, we get a freaking rally in the stock market. But friends, make no mistake, we could go down further before that happens. We could go down further. That's my current view. I hope you found this video interesting. If you did, please like this video and subscribe to this channel. I'm making daily updates on the stock market, on the crypto market, looking at inflation, looking at many metrics so that we can understand what stocks and crypto is going to do, friends. Have a nice day and see you in the next video tomorrow. Auf Wiedersehen.